Well, let's get more with Paul Young, Managing Editor for Singapore Oil Markets at Platts. Paul, good to have you with us today. You know, we were sitting last August around a record high of 78.65 a barrel. We're creeping up there, aren't we? I mean, we're only, a number of dollars away from that. Do you think there's a possibility, based on what you see in terms of bullish fundamentals for the market, that we could get there this summer?
We've actually seen that pattern the last 2 or 3 years now, where we are hitting those new record highs in the third quarter.
Yeah.
Interestingly, this year, though, we're not having that massive headline. What we had 2006, it was background of like the Israel-Hezbollah war, and then we had the Prudhoe outage, which was very big news for the market at the time. Previous year, we had the 2 hurricanes. This year, the last few weeks, we haven't had any major outages, but you mentioned Nigeria. That's becoming more and more focus when they're kidnapping children now. Not necessarily a political move, could well be a criminal move, but it just shows, how broken down that part of Nigeria where the oil is. People are not going to want to go there.
Paul, good morning. Are we going to continue to see a product-led market, especially given the fact that we are in the midst of a peak summer driving season? And is that going to be the catalyst that's going to help the market revisit fresh new highs, especially if we have a vicious hurricane season this year?
Yeah, the hurricane season, the predictions last year were for another major one. It didn't materialise. This year, we just really don't know if there's some damage to refineries. But even without that, there does look to be some tightness in the products markets in general. Gasoline consumption in the US, I know we always talk about it, but it's over 10% of the world's oil consumption on a daily basis. We have to talk about it. It's still growing at something like 1.7% a year, so even with US consumers paying $3 gas, they're not buying less of it.
Stand in terms of the overall inventory position with regards to gasoline right now in the US?
Sorry, could you also say again, please?
Sure. How do we stand where do we stand with regards to gasoline inventories in the US? Do you reckon it's going to be enough to meet demand during summer driving season?
The refinery runs had been relatively low in the second quarter because we had so many problems. Typically, we were running well below 90% capacity at one point. Some of those refineries came back up, but the last week or so there's been another couple of problems. They really need to get that refining capacity back up and working, and we've discussed this before. A lot of analysts are saying because the refineries worked so hard after the hurricanes a couple of years ago, they missed maintenance schedules. The legacy now is that we're seeing more refinery problems.
Paul, I wanted to get your view, just go back to the geopolitics if we could. We've talked about Nigeria. There hasn't really been that much of a discussion in the oil markets of late about Venezuela, despite the fact that we have seen President Chavez really intensify that nationalisation drive. We've seen some big names exit the country. How big a stimulus do you think that's going to be on the upside for oil prices?
It didn't really seem to affect production that much. There were 1 or 2 concerns that if the majors who operate there and who may well be leaving, if they pull out their engineers immediately and experts, there could have been a blip in production. We probably won't see that, but long term, it's less likely that production will increase. Venezuela used to produce over 3 million barrels a day. They're now down to about 2.4 million barrels a day. The worry is, will that trend downwards continue when, what the world really needs is more oil from Venezuela and particularly the US?
We were just a moment ago talking about the tightness in the products market. Well, some interesting comments from OPEC member Iran over the weekend, pointing to the lack of refining capacity and also geopolitics as why prices are so high, and not that there's any shortage of crude in the market. So it certainly looks as if at this stage we're not going to get any respite, are we, in terms of more output in September?
OPEC have been saying it for several years now that they saw a refining crunch coming up, and credit to them, they were correct. There has been a refining crunch the last year or two, particularly after the hurricanes. As to whether there's enough crude oil in the market today, they're probably right. There is just enough today, but we're at that position again where if we lose some, who's going to make up for it? We're seeing some, this time of year, You know, we've mentioned Nigeria, very worrying. The North Sea production schedules are coming up because there's only a few months of the year where they can actually do the maintenance, where the seas aren't so rough. And North Sea in general, like we saw the latest report, productions continues to decline at something like 14% a year. They have all the best technology there. It's things like that that are worrying people. So we've got those natural declines. Who's going to make up those shortfalls?
Okay, well, thanks very much for describing the oil market to us.
Welcome.
We've been speaking with Paul Young, Managing Editor for Singapore Oil Markets at Platts.